Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool community. My name is Wack. Today is April 10th, and today's episode is going to cover huge news out of the Diva staking ecosystem. Also, on top of that, we have Rocket Pool's biweekly news from Mav, and Phiz talks Ethereum monetary policy and correlated penalties. Let's get started.
10, 9, ignition sequence start, 6.
Okay, so the first piece of news we have today is from Diva. Diva staking, as you know, is a rival staking to a protocol to Rocket Pool, and their claim to fame was that they were going to enable DVT, which is distributed validated technology, at the protocol level. They were going to build their protocol around that. Well, they were teasing, as I covered in yesterday's episode, they've been teasing some new changes that are coming, and at the time I thought it was that they were going to be launching their protocol, basically. Like, we've been teased, it's been teased that it's going to be launching in Q2. The audits have been happening, gas optimization stuff's been going on, so people thought that they were going to basically be ready to set the transferability of the token, which means that you could sell it on the secondary market. There'd be a market for it. It wouldn't just be locked in your wallets, and then also that the protocol itself would go live soon-ish, at some point soon. Well, they kind of threw a left ball curveball to our left field. I'm mixing up all my baseball metaphors, but there was a quite a stark departure from a previous model. So what they've done is they've launched this post called "Introducing Nectar Network: The New Era of Restaking." Nectar Network, they're given the introduction. They say Nectar Network emerges in the dynamic world of blockchain and Ethereum, marking significant stride towards provide the newest restaking ecosystem, establishing a multi-layered network that aims to enhance cryptodynamic security and scalability. Nectar serves as a comprehensive security ecosystem designed to refine, foster Ethereum security framework and expand the scalability of various applications. So here are the key parts. So they're going to have the AVSs, actively validated services, a term first introduced by Eigenlayer. AVS uses the collective security power of Ethereum to support new proof of stake based systems, providing a reliable trust model for app integration. Restakers and operators, this feature allows restakers to increase their rewards by participating in Nectar, while operators can offer their services by maintaining staked assets, thus enhancing the network security and validation process. And then distributors, they streamline the restaking experience, making it easier for users to allocate their assets to operators, promoting a more efficient and secure network. So the way that it happens is there's going to be all these different factors now that come together to make Nectar Network. So we'll have AVSs, LRTs, public goods, and then Nectar restaking protocol, Diva staking protocol, which is what we thought they were going to have into like the general idea, and then that'll be sitting on top of the Stinger client, and then that all will be sat on top of the Ethereum network. So it's basically a stack that they're creating. The Diva stack will be, that still will happen, which will be their DVT staking module. And then on top of that, they're building a new restaking protocol. I guess that will be a rival to Eigenlayer. And then on top of that, they'll have a lot of the different kinds of things that Eigenlayer has as well. So they said this is going to be a more decentralized approach to restaking. And then they have the core components as well as how it's all going to work. So the Stinger client is going to be their version of the smart node stack, I presume, with their DVT built into it. Then the Diva staking protocol itself will be the actual staking that takes place. And then Nectar restaking will be the ability to take your div ETH, I guess, and have some kind of like restaked div ETH, like R div ETH or something along those kind of lines. And then the Nectar's marketplace will be the place where all of that can kind of come together. So there's some more information here as well. So if you're interested in that, give the whole of the Medium post a read. But on their Discord, so they rebranded their Diva Discord now, is called Nectar Multi-Layer something. Let me see if I can see the full name. No, I can't see the full name there. Anyway, they have this blog post that they put out today as well. And they said announcing Nectar Network, Scale Your Trust. So they just kind of gave a summary of what the Medium article was. So you can go and read that announcement as well. It's got slightly different details. But the interesting thing was here, they launched when they launched, their general channel, which I guess is their version of trading. People started asking questions about it, and they said, the announcement is ready to go live any second now. And then people like already started saying, Nectar's a cool name, but people right away started asking, is the Diva token still valid? And then, is this real? Are we pivoting? So Slump says, probably be a very simple one-to-one swap. Don't worry, just wait for the announcements. Not everyone likes Divas, but everyone likes Bs. So they started answering questions right away. And here people, one of the main questions people had was, is the Divas token still valid? The reason why they're asking that was because, there was the program where you could deposit your STETH, etc. And you'd be earning Diva tokens. So people were just wondering, if they're rebranding, is the Diva token still going to be anything? Well, we started getting answers to those questions over here. So Michael asked, when can the tokens be transferred? And said that's an old question. And then here, Serious Business says, where is this competing with EigenLayer? I think that's the idea that they're having, basically. So rather than restaking through Eigen, Nectar is running a separate platform. So it looks like they'll be trying to bring in their own AVSs. And then Nico here confirms that, he says, indeed, that's the case. And then, Ben was saying, Diva was great branding, but Nico says Diva is part of the Nectar network now. So it's kind of been brought under that umbrella. And that Diva is not going away. It's the base layer for Nectar. The latter just builds on top of it. So it seems like, the people who were previously called like Diva in their usernames on the Diva staking Discord are now called Nectar Network as well. So they've changed their names. And they're saying that, people then asking, are there going to be multiple tokens, or will Diva still be the token that we'll use? And then they said, basically, that's a good question. Diva remains, but. So here, Deep Crypto Dive kind of insinuated that maybe there might be a different token at some point, which will be interesting to see. But Nico replied by saying, Diva is the only token that we have. But then they were saying that, the only thing that they've confirmed is there's a Nectar network. There's nothing about a token yet. So basically, start airdrop farming your Diva, start staking with Diva to maybe get eligible for Nectar tokens, or restaking with Diva once that becomes available. So anyway, people were asking more questions. There were a couple of questions I wanted to pull out from Pateris and Noshua, who are of course part with the Rocket Pool community. I should have had those loaded already. I'm sorry that I didn't. But like I said, here's Noshua. So he says, is the plan still to launch Diva and QT and other components once they're ready, or does this change timeline for Diva? So Prada answers by saying, yes, that's still the plan. The audits are ongoing, but they still want to launch in Q2, which makes sense. But because I think Nectar is going to come later. So here, Kotler says Diva is Diva, and Nectar is Nectar is Nectar. Diva is a layer and remains unchanged. And then let me see where Pateris is as well. But there were a couple of questions that were quite interesting about, or comments, I guess, that were quite interesting about how, the Diva DAO, of which of course I'm a member and I'm quite a powerful voting delegate, was not consulted on any of this. It kind of went past the DAO in total, and that was mentioned as well. Slump says, what about the status of Diva token regarding governance of the staking protocol? There's no change, and they said Diva is the only token we have. There's no changes. So that's kind of the official line. Pateris said, will there be a new token also? And Nico said, not the plans that I'm aware of. And then Pateris says, will there be a Diva DAO vote to join the Nectar network? Which is of course interesting. So that was replied by Noshua commented on it as well, saying that asking the DAO after it was announced would seem like the wrong order. So yeah, there was some here, and then Nico replied to Pateris saying, no, there will be no DAO vote. This integration does not affect Diva. Its main purpose is still ongoing. So the way that they're kind of explaining it is that Nectar is going to be a layer on top of Diva. So it's kind of like, I guess the way that they're saying is permissionless in a sense, where Diva as a protocol doesn't really care what happens at the layers above it, right? Like as long as Diva works properly, then they can use the DivETH token to make new RDivETH tokens, etc., whatever they need to get Nectar working. So it seems like that's kind of like the angle that they're going for. And then they're saying that there's that's why there's no token. Sorry, there's no DAO vote because it doesn't impact Diva. Diva is just its own thing with its own voting and its own everything that's happening already. None of that is going to change. This is just stuff that's coming on top of it later. So here Nico says Nectar network will only have one token, which is Diva. Has only one token, which is Diva right now. And maybe later it might have more tokens. So it'll have staking, DVT, restaking, ABSs, and said that looks good to me. So and then here Chris says a Nectar network is Eigenlayer 2.0 because they're building it all in-house with the staking in-house and the layers on top of it. And then Patera says, will Diva have a special code for Nectar, or will Nectar be built on top permissionlessly? So Prada didn't understand what that means. So Noshua says, theoretically, could anyone build a Nectar clone on top of Diva that works just like it, or does Diva do things that allow Nectar to operate? These guys asking the real questions is just kind of cool. I really like that. And then let me see. There was a reply to that as well, but I'm not sure. Yeah, here it is. So Prada replies to Noshua saying yes, but with caveats. But yes, more details once we have all the architecture drafted, but no approval required to build whatever you want on top. And then Noshua, of course, replied with the Noshua thanking emoji, of course. Patera says that it's easy to get the Diva DAO on board. Just promise Nectar tokens to everyone who votes in favor, and the rest can stay with the original DAO. But yeah, there's some jokes and stuff, but there's a whole lot going on over here, so people are still trying to figure out what it's going to look like. Patera says, will Div ETH be the only token that can restake? And Prada says, for the moment, ETH or Div ETH, yes. If other assets are accepted, is yet to be seen. And if so, we will try to make it as modular as possible. So that is very interesting. So yeah, I've taken up a lot of time talking about Diva, but like I said, this is a really big story coming out of Diva, and it's going to be really interesting to see how it all plays out. But see, Diva's like, what they've done is, like, I made this comment a lot, right? Like the Diva got caught basically in no man's land because they came too late to like regular liquid staking, and they came too early for liquid restaking, and they kind of got caught in that no man's land where it's going to be really difficult for them to build up market share. But now the fact that they're building Nectar on top of their LST, which is the Div ETH, what they're doing is automatically capturing some of the Eigenlayer hype. But it's not just Eigenlayer hype, it's like restaking hype, because they want to build their own product. And it seems like, it's going to be a few months away that they'll have it going live. But in the meantime, what they're doing is trying to make it happen, which is actually really interesting, because they've seen, right, that there's a lot of potential like issues here, and they're trying to get ahead of it all. So good luck to them. Like if they can make this work, then that's really cool. And I wish them luck and success. But I'll definitely keep an eye on it and see how it's all going to let you all know. Okay, and just to remind you, if you have Div ETH on your node and it's locked, when it does become transferable, Val here is reminding people that there's a command to send any like arbitrary ERC20s from your node. So if you have Div ETH locked on there or any other token on your node, you can send that out using that command. And so Val says, if I send your uni to your node, you can send it wherever you want using the command line. And that doesn't help with soulbound tokens. So currently Diva is a soulbound token. It doesn't have transferability activated yet, but once that's activated, you'll be able to move your Diva token off your node and onto whatever wallet you want to use. Okay, so getting to Rocket Pool stuff now. Here we have a bi-weekly update from Mav, a protocol update from Mav, where he includes a bi-weekly update. He says, hey everyone, 3 quick notes from me today. 1, make sure to vote on RPIP-39 about incentivizing the bounty system. We're going to be talking about that later. It says, catch up with the latest bi-weekly update. And hear from Jasper will host flat money on the next community call in 4 hours from when I'm recording this. That will be taking place at 8 p.m. Eastern time, which is, 1 a.m. in London and 2 a.m. in Europe. So keep that in mind. If you want to take part in that community call, then that will be happening in 4 hours from when I'm recording it. Let's have a look at the bi-weekly update though. Here we have Mav, and we see again that the RETH has had another week of decline, and this time another 2 weeks of decline. So this time we've gone down by 3.2% to 525,000 RETH, which is an annualized decline of 82%. Of course, I'm hoping that it doesn't stay 82% decline in the year, but hopefully, this is a trend that will buck soon. However, the deposit pool has had some space in it for a week, and it hasn't filled up, so that is a small area for concern. But hopefully, it's not a long-term thing. And then next we have pending plus active mini pool count declined 0.3% to 25,217, down annual 9%, and the node operator count is up to 3,635, which is up 0.6%, annualized growth of 17%. With a smart node, we have version 1.12.1, and version 2 is feature complete and testing has commenced. With R&D, we have RPIP-30, so the withdrawal limit was reduced, and also work continues on Houston, now towards a 27th of May release date. With governance, there's the GMC stuff that's happening. There's more GMC stuff that's happening. There's dozens of comments were added to a tokenomics thread. Nodeset shared a report about Rocket Pool tokenomics. Feedback was sought on the best way to distribute protocol revenue. A GMC funded research report on forced exits was published. Feedback was sought on smart node notification options. The latest GMC treasury report is also available. In terms of integrations, the IMC worked with Gyroscope to co-incentivize a position on ZKVM, and some RETH users on Prisma may need to revoke delegate approval. If you're affected, please be safe and contact the Prisma team directly. And then there's some new real-world asset synthetics protocol that supports RETH. With media marketing, there was an article about how Rocket Pool has been relatively resilient while other protocols have declined significantly. And then the deposit pool had space, like I said, and the Nodeset were on the community call, which I gave a summary for. And participants also got a POAP, which was really cool. And a design company reviewed the new Rocket Pool website. Oh, well, I actually missed that. Let me see what they said. Rocket Pool website was one that make you go, F, these guys know how to design. They poured a ton of work into making something stunning. If you're a web designer or run a Web3 project, this website is a must see. That's really cool. Oh, congrats, guys. Like, that Nick and Sleety will really be happy with this. So I'm not sure if they've seen it. They've almost definitely seen it. So good job. Congrats. Okay, let's move on from there now to this post on Reddit, which Phiz has published. It says on issuance reduction and anti-correlation incentives. So it says, I'm going to do my best to summarize a very hot and contentious debate in Ethereum staking right now. So this is about changing Ethereum's monetary policy to make sure that the not all 100% of ETH is staked, because that would lead to bad things. So they're trying to figure out how to limit that and change that. So Phiz here gives a summary of the different things. So like their staking targeting proposal, and Phiz says, the pros of this limited validator set reduces the risk of protocol capture, reduces the ability of LSTs to become money, preserves the concept that ETH is the money of Ethereum. The cons of this being that potentially lower validator payouts, because rewards will decline with more validators, finding a naturally low equilibrium, unless it breaks the narrative of locking Ether means higher priced Ether, but this has already been broken by LSTs. And the anti-correlation penalties for attestations. So I covered this on yesterday's episode. I said the pros are encourages decentralization, especially by promoting running validators on multiple machines and different networks. This can bring greater long-term value to the network, gives higher penalties to large operators and favors smaller operators. It says cons, this is a powerful lever will be pulled hard enough to make a real difference. Home stakers who are part of large outage may suffer large temporary penalties, which is what I was referring to in yesterday's episode. The summary here, Phiz says, the core question revolves around the degree of ossification of Ethereum. If Ethereum is ossified, we're pretty much done tinkering with rewards and penalties. We should promote stability that leads to long-term value accrual. If Ethereum is still young and under development, then we should continue improving rewards and penalties until we find a Goldilocks zone that promotes high decentralization and worry about value accrual later. So there are a whole bunch of comments here that you can go and have a look at. Let's go back to the Rocket Pool community, because there was a lot of discussion taking place about the anti-correlation, the correlation penalties. So basically, like I said, if a lot of validators are from one user are down at the same time, and they'll start getting outsized punishment of losing rewards compared to if like just one validator is down at some given time. So Jasper here shared his tweet saying, "This is huge. A change like this would not only preserve the thousands of globally distributed Rocket Pool node operators, but give us a leg up over centralized competitors. Rocket Pool provides more censorship resistance than any other LST. Soon it may earn you more too." So it seems like Jasper was kind of excited. I was kind of excited. I talked about it in the episode yesterday. The numbers showed that, Rocket Pool would do really well with this. However, the picture is not that rose. It's not all roses. And the discussion that got started in trading here was one that was actually really interesting. So what happened was, where is it? This is actually, yeah, I'm not sure where the discussion starts. I might have pasted the wrong comment here, but the kind of things that people were saying, well, it was Valdorf and others that were involved in the discussion. They were saying things like, oh yeah, here actually it starts here. So Jasper shared the graph that I looked at, the chart that I looked at in the episode yesterday, and he says, "Can anyone do the math and tell us how much this would help us?" And Noshua, what happened was Noshua said no, and Jasper was like, "Is it because you don't want to, but is it because it's impossible?" And Noshua says, "The thing with changing incentives is that you change behavior. You can do math as if everyone keeps doing what they're doing, but that's not a good prediction. E.g. right now, professional stakers aren't getting to pretend they're also solo stakers, so they don't, but if you pay them for it." So this actually misunderstood. Noshua here misunderstood what was happening with this. It basically meant the more validators that are down, the more they would get punished. So even if you were pretending to be a solo staker, if you were all in the same network and the network went down, then they'd all get punished regardless, right? Like, so that wasn't the point. But there was some interesting things here, like Samus was saying, is there anything stopping a centralized actor from just forcing different combinations of the node to miss attestations at different times to make them uncorrelated? So that's not how it works as well. So Patches explains how it works. He says, it's not like they have missed attestation quota to reach. They could just miss 0 attestations and not look correlated because there's nothing to correlate. And then bonus is a healthier blockchain. Samus said, I didn't look closely. But then Patches explains, he says, correlated penalties are proposed to essentially punish co-10 validators. If the node is offline, all the validators miss attestations. The more of them there are, the worse the penalties. And then the idea is basically, if Coinbase happens to be missing attestation at the same time, and that my random internet has issues, I also get punished. Patches says yes. So then the discussion was, Samus says that, so if Coinbase has 100% attestation rate, it doesn't impact them at all. And then that's right. And Patches says, I generally don't like it for what it's worth. And Noshua says it's just stronger incentives to not miss attestations, which seems like it favors bigger operators because they're able to have fallback nodes, they're able to set up like localized DVT clusters, etc. And here non-fungible Yoakum says it will probably drive a lot of DVT adoption. So basically what will happen is if you are DVT protocol, if you can, share out validation duties across a bunch of your own services, then you're less likely to go offline and you're going to this isn't going to be applicable to you anymore, basically. So the bigger operator, so this is the crux of the whole discussion, right? With the minimal viable issuance, is that as you set up a curve, it becomes more profitable for larger entities at the margin to eke out those marginal gains. And it's same here as well, is that the bigger entities are the ones who actually be able to invest in infrastructure to make sure that they have 100% attestations. And all nodes, that's whose name I forgot yesterday, all nodes already has infrastructure in place that gives them 100% attestations. So even though they've got such a big percentage of the network, they're never going to get any correlated penalties because they're all nodes, they're going to be live all the time. So there's a really interesting discussion. Go ahead and look at this a little bit more closely if you want, because there's a whole lot going on over here. I think, as always, with these suggestions, there's second and third order effects that people might not be paying attention to right in the beginning. Okay, next in today's episode, we have this RPIP-39 Bounty Incentives. So this is a new vote that's come up for covering bounty incentives. This is RPIP-39 proposes to allow the Grant Management Committee to pay out incentives to community members engaging with the bounty system. Incentives are limited to 10% of the total bounty rewarded amount. A consistent allocation method for bounty incentives left to the GMC to determine and announce. These incentives are paid out of the GMC's budget. The PDAO may challenge individual payouts and changes to the incentives allocation method using the existing committee decision challenge system. And the outcome, if the vote passes, is this will be ratified by the PDAO, empowering the GMC to spend up to 10% of a given bounty payout value on incentives connected to that bounty. And then you can go read in the rationale, etc. So far, we've had a big chunk of votes have already come in, 3,800 out of 7,200 that needed for quorum. At the moment, it's 81% for, about 10% abstain, which is just Ken, who's a GMC member, and about 10% against, who's basically just Ramana, because he says that the fact that it's denominated in USD is a bad thing. He wants it to be denominated in RPL, and people like Val and myself have voted for this. Val says it's clear that we don't get as many quality bounty proposals as we'd like. This makes sense to me and gives the GMC flexibility. And I said this is good for the GMC and the PDAO. So those are our votes that have come through. Okay, let's go back to the Discord now. And today we had the GMC Town Hall, which actually was very well attended. So Shifrin here wrote notes for it, and he says that great community turnout. Thanks everyone for joining. GMC is experiencing bottlenecks with complex bounties like eigenlayer integration and SSV integration, particularly due to the absence of identified parties to undertake the work. The decision to fund a bounty prior to engaging interesting parties carries both advantages and disadvantages, which can vary depending on the project. As the GMC faces challenges in evaluating large retrospective awards and prefers that they be submitted as grants or broken down into milestones with frequent updates. And then we have bounty verification as well, and about how the Rocket Fuel submissions thread is kind of taking the place of the ping server, but it might be worth it to put more things in the ping server as well. And then discussions taking place regarding the eigenlayer and SSV bounties. After that, we have the GMC members have expressed interest in establishing a budget to guide the allocations across different funding categories. And finally, we have crafting bounty definitions and how that remains challenging. So give that a read if you are interested in what was said at the town hall today. Okay, next we have this image of Vince McMahon smelling the money, and this was a very popular GIF a couple of years ago because it's a rewards night and we're all getting paid. However, sadly, not everyone's getting paid today. But this is just a reminder that the final snapshot for the rewards period won't be taking place until about half an hour before this rewards period ends. So that's when the ratio will be locked in. So if you have topped up recently and the price has gone down, sadly, you might have to top up again before the rewards period in order to be eligible for RPL rewards today. That's happening in about 8 hours time from when I'm recording it. So definitely keep that in mind. Okay, next we have this post from Ramana and Joe, and this is RPIP-39, and this is related to rewards tree specification. So yesterday, I covered that there was a little bit of drama with some rolling records and rewards trees, and it seems like Joe and Ramana are trying to fix this. And it says abstract the RPIP. This RPIP describes the current state of the specification of the Rocket Pool rewards system, first introduced in Redstone for node operators, wherein ETH and RPL rewards are allocated at regular intervals to staking nodes. And it says that Rocket Pool's allocation of rewards to node operators needs clear specification that can be independently implemented and verified, so the node operators know what to expect and be able to verify the rewards themselves. It says the rewards tree specification is currently developed in the external Rocket Pool research repository. Development there began before the RPIP process was created. However, since it's a core protocol specification, its proper home is as an RPIP, where it can be easily found and referred to with clear status as an official definition of part of the Rocket Pool protocol. This RPIP is an informational document describing the status quo with the intention of following up with future PDAO ratified RPIP, which may or may not include changes. So then there's some information there for you to have a look at and dig into. Okay, next we've got this update from Joe here, who shared a screenshot of the smart node stack, and basically it will allow you to batch transactions on through the smart node stack in version 2, which is actually something that people have been wanting for quite a while. So it's really cool that this is getting done and put through. So there's the output that Joe pasted, and then there's also some discussion here where Sneaky says, what are bulk transactions a thing now? Joe says yes. the route was called submit batch transactions, and basically smoke testing enough to know it's not immediately broken everywhere. Then I'll start a write-up of what's changed. And then, of course, Sneaky's very happy. He says, yes, sir. It says, will this work on batch exiting mini pools too? He says, yes, although that's slightly different operation because that involves sending stuff to beacon chain instead of the execution there. But in principle, it's the same. So version 2 is officially going to be better than version 1. And Sneaky says trying to do transactions in volume, but having to relook and verify if the previous one has gone through was removed from the list presented by CLI was so painful. So this is definitely going to make things pretty cool for that. Okay, next we got a couple of sad stories from node operators who are basically having a bad time with Rocket Pool. So here we have Great to Be Here, who sadly is not happy to be here anymore. He says the RPL exposure was horrendous. I lost about 7 ETH during my time as a Rocket Pool node operator. As well, they're competing solutions that don't have that type of exposure. So, Great to Be Here left, which is a real shame. Also, we had stories of other node operators like this, Angus.eth, I'm sorry, I don't know how to pronounce that, says, I come here to bitch about it every month. I really can't take this anymore. And the more nodes I have, the worse it gets. I think it means validators is when they were going to fix the RPL tokenomics thing. Basically, this user is under collateralized and is refusing to top up on their collateral, but is asking when we're going to fix the tokenomics. And it's going to take a long process. Ramana says that it's going to take a while. Yeah. So this person saying any percentage change on RPL ETH token means a large number to us. I mean, seriously, doesn't even make sense anymore. Every single month I think about closing all my mini pools. Please, 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 I beg the RPL gods to save us. And Ramana says they're not gods. So yeah, so it's a tough time for users out there. A whole bunch of our users are currently under collateralized. And as you can see, the protocol is actually shrinking recently instead of growing. And hopefully Houston and then NodeSet will be able to change that course. Okay, so next we've got some non-Rocket Pool news. So here, this is Mark, who's ETHDreamer.eth, who is spearheading the EIP-7251 stuff. And this is calling all staking pools, we need your feedback. There's still a few outstanding design decisions to be made. I've written a quick post to get you up to speed, so get involved. So we've covered this a few times on Rocket Fuel, and if you are interested at all in EIP-7251, then go along to this call and listen to it and find out what's going on. The Rocket Pool team, I think, has been caught up with this, and I think Langas will be attending. That's actually really cool to see. And finally, today we're gonna finish today's episode with this news from the SEC and Uniswap. So here it says SEC moves to sue Uniswap in a bid to hobble fast-growing DeFi sector. There's a picture of Gary Gensler, and it's just saying that they've been served a Wells notice. And we have a tweet from Hayden Adams, and he says today Uniswap Labs received a Wells notice from the SEC. So a Wells notice is a notice saying that basically, we're thinking of suing you, and here are the reasons why, and here's what you need to do basically to avoid it. However, Uniswap Labs are taking quite a strong stance here. So they're saying, here Hayden says today Uniswap Labs received a Wells notice from the SEC. I'm not surprised, just annoyed, disappointed, and ready to fight. I'm confident that the products we offer are legal and that our work is on the right side of history, but it's been clear for a while, basically the SEC is garbage and they're not good faith actors in how they talk to crypto companies. So when I first set out to build Uniswap, the goal wasn't to reimagine finance. It was an experiment in radically decentralized, fully automated on-chain markets. I didn't know if it would work or if anyone would use it. Fast forward to today, it's done $2 trillion of volume, which is amazing. And they said that we're based in the US. We're not hiding from anything in the US. We're not going abroad. This is people often ask me why we stay in the US. My answer is simple. I believe that blockchain is an incredibly powerful technology, like the internet, but it's here to stay. So someone needs to figure out. Might as well be us. So basically, he's saying that. So instantly, a whole lot of the crypto community has just been like, what on earth is the SEC doing here? This is so stupid. They're literally going after the company that has one of the biggest war chests in all of crypto. The Uniswap Labs is worth billions of dollars. They've got billions of dollars worth of Uni tokens, and their war chest is huge. And the crypto community is basically going to fight this. Even Hayden here says this fight will take years and may go all the way to the Supreme Court, and the future of financial technology and our industry hangs in the balance. If we stand together, we can win. I think freedom is worth fighting for, and I think DeFi is worth fighting for. And of course, we won't stop shipping. Stay tuned. So yeah, there's some strong fighting words from Hayden there and Uniswap, and it's really interesting to see how all that's going to go. And just because they got a Wells notice doesn't mean that they're going to be sued, but it's almost definitely means that, you know, the SEC is going to bring some kind of legal action against them. Anyway, on that note, I want to say Eid Mubarak to all of you all. Today is Eid, which is one of the 2 major celebrations for Muslims around the world. Yeah, Eid Mubarak. And thanks all for watching, listening, and being part of the Rocket Fuel community. And I will see you all tomorrow. So bye.